When I was asked, again, how high do I think it'll go? I was like, well, I think we could see 100K this cycle. And that one proved too bullish. So there were calls for 200K or 400K. And I was like, well, let's start with, we already did 50K. Let's get to 100K. I didn't quite get there. We only got to 69. And so when I saw Bitcoin drop very rapidly, it actually made a lot of sense to me because it was acting very similar to silver at the time. Whenever you have a liquidity squeeze, assets like that tend to drop pretty sharply temporarily. And so my view was once that really big stimulus comes in, it's likely to be very favorable for Bitcoin, just like it is along, as it would be for precious metals. We had the internet, we had bandwidth, we had strong encryption, and so we could now have money that is actually hard and fast. It could be as hard to dilute as gold, and yet can move around the world as fast or faster than dollars.
Still watching your portfolio swing 20% and not knowing whether to buy, hold, or get out? You're not alone. Most people in crypto are just reacting. Very few are actually reading the market. This channel is for the ones who want to read it. Bitcoin, macro, on-chain data, institutional moves. We cover what actually drives price. Sharp analysis, no noise. If you're serious about this market, subscribe and turn on notifications. You don't want to miss what's coming. Lyn Alden called a 100K Bitcoin price target. It didn't hit. Bitcoin peaked at 69K and rolled over hard. And she wasn't even rattled. Because here's what you need to understand about Lyn Alden. She's not a crypto native. She didn't find Bitcoin through a Discord group or a YouTube rabbit hole at 2 a.m. She came from electrical engineering. She built aircraft simulators. She applies systems thinking to capital flows before most people in this space knew what fiscal dominance meant. When COVID hit and markets were in freefall, she put out a buy report to her research subscribers in April 2020. Bitcoin was around $6,900. She told them exactly why she was buying. MicroStrategy linked to that article a few months later when they were assembling the case for their own Bitcoin treasury position. Then 2022 came. Terra Luna collapsed. FTX imploded. Bitcoin dropped from 69K all the way to 16K. The whole industry was on fire. Lyn said it was the most conviction she'd ever had. She joined a Bitcoin-only venture fund. She started writing a 500-page book on money. She spoke at a conference while FTX was actively blowing up and said the energy in that room was incredible. You're about to hear her explain 3 things in her own words. Why she thinks Bitcoin solves a problem that has eluded money for thousands of years. What she actually saw in 2022 that gave her 100% conviction while everyone else was selling, and the COVID stimulus trade that made her one of the most referenced macro voices in the space. This is Lyn Alden.
So I was publishing research at the time, like I still do. And for COVID, initially, like in February of that year, I started to see kind of credible reports that the virus could be, spread and that, lockdowns might actually happen. So I gave out some kind of warning reports. But I had written back in 2019 about kind of the topic of fiscal dominance and how as we kind of run into the zero bound of interest rates, we're likely to encounter much more extreme fiscal monetary policy on the next recession. And so in 2020, when we had a kind of a lockdown-driven recession, I was like, okay, we're watching certain things break financially, like bond market break and all this. So I was watching and saying, okay, the central bank's going to come in with like the biggest stimulus we've ever seen, and then we're probably going to see very large fiscal injections. So the vast majority of my attention at the time was on macro and kind of the downward crash and how just shocking it was, as well as trying to figure out what sectors or equities are likely to bounce back and which ones might have like an actual kill shot, right? So it's like, okay, I'm not sure about airlines or cruise ships, but I was like, a company like American Express that's falling, the stock's like crashing. I'm like, that one's going to come out stronger on the other side of this, right? So I have more confidence to say buy that dip than buy something that might be more structurally impaired by, a virus or a lockdown set that I don't fully understand. It's not my field. And so it's kind of like, that's what a lot of my focus on was mapping out the stimulus effects, mapping out kind of the equity options. But I'd already been investing in precious metals. I had a long history of precious metals. And they all also dropped pretty sharply during spring of 2020. Gold dropped and silver dropped way more severely. And so when I saw Bitcoin drop very rapidly, it actually made a lot of sense to me because it was acting very similar to silver at the time. Whenever you have a liquidity squeeze, assets like that tend to drop pretty sharply temporarily. And so my view is once that really big stimulus comes in, it's likely to be very favorable for Bitcoin, just like it is along, as it would be for precious metals. So it was actually in April 2020. I put out a report to my research subscribers saying, this is why I'm buying Bitcoin here. It wasn't the very bottom, but it was kind of sharply. We already had the stimulus kicking in. Assets like stocks, silver, gold, Bitcoin, they're all coming off of this like V-shaped bottom. And so I was quite bullish. And then in June of 2020, when Bitcoin had gotten back up to like 9,000 or something, my view was kind of like, okay, here's it was an article called 3 Reasons Why I'm Buying Bitcoin. And it kind of just made like a fundamental case for it. It's a public article. I think even at the time, because it was August 2020 that MicroStrategy ended up buying it. And when they were kind of assembling like resources on their website, they even linked to this one, for example. It was like it kind of made rounds at the time because again, it was like external validation for the space, especially when in the mid 2020 it wasn't a raging bull market. It was like a flat market at that point for Bitcoin. And so I've kind of been structurally really bullish ever since. Although sometimes more bullish than others, depending on the level of euphoria or kind of despair in the space. There's a long stretch of time, like thousands of years, where whenever different monies would come together, the hardest one would win, right? So if silver comes into contact with shells, the people that use silver as money generally will have tools that can allow them to dilute the number of shells rather than inverse, right? The people that have shell money can't really come out and just flood the market with silver as well. And so over time, silver would win. And so when all the different kind of commodity monies around the world came together, it was ultimately gold and silver that won that competition because they're the hardest to just kind of permanently flood the market with. But once we entered the late 1800s, we had the kind of the cross-border telegraph. And so it wasn't just hardness that mattered; it was also speed. And so that kind of started introducing what would later become the fiat age. It's basically being able to beam money around at the speed of light, or at least beam around IOUs and transactions, and kind of like kind of reduce at least the perceived importance of kind of ultimate settlement, like shipping a gold bar across the world and verifying it. And so for this long stretch of time, we had, hard, slow money like gold, and we'd have fast, weak money like dollars, and especially the long tail of other fiat currencies. And Bitcoin is kind of the first one to come along and kind of solve that problem because technology had caught up. We had the internet, we had bandwidth, we had strong encryption. And so we could now have money that is actually hard and fast. It could be, it's hard to dilute as gold, and yet can move around the world as fast or faster than dollars in many cases. And so I still think the system is new in the sense that, it doesn't have the durability or the kind of the proof that, say, gold has over a multi-thousand-year period. But I would say, in 17 years of existence and the rising network effect and working stability the whole time, I do think it's a really important money to have in a digital age. If it wasn't for Bitcoin, then the only way to send money around quickly would be heavily centralized systems, surveilled, controlled. And I think Bitcoin is an absolutely critical alternative in the modern age. I would say that was the year of the biggest gap between my conviction and with the market. So basically, while that kind of bear market tested a lot of people's conviction, I actually had 100% conviction at the time. That was kind of the biggest asymmetry I saw. And I would say a lot of what happened wasn't really black swans. I mean, a couple of things were, but they were prior things in the industry. I mean, Mt. Gox was proportionally bigger than anything that happened in 2022. At least relative to the size of the industry, which was tiny back when Mt. Gox blew up. And for example, with Terra Luna, In my reports, like to clients leading up to that, I actually was monitoring that because, especially once they started buying Bitcoin for their, reserve, it could impact markets I was following. And I actually kind of dissected exactly how this could break and why I was worried about it breaking. And so in two different reports, I kind of mapped out the risks that Terra Luna was facing. And even to my surprise, literally a month later, it just completely imploded. And so I actually wrote an article at the time right afterward called Digital Alchemy. People can Google it if they want. It's a public piece where I talked about kind of the whole industry breaking. I then showed, kind of big segments from my reports leading up to that Terra Luna implosion. And kind of explained that, while I'm not bullish on the vast majority of the space, I'm still bullish on Bitcoin longer term. And that was also when, so in 2022, Ego Death Capital started to come together. So it's a Bitcoin, today it's a Bitcoin only venture fund, raised over $130 million to invest in Bitcoin specific startups. But back then, the initial founders were coming together. They asked if I'd be an advisor. And so I decided to be. So, it's funny because when you're raising capital in a bear market, if anything, it's the best time to deploy capital, but it's the hardest time to raise capital, right? But we had such high conviction that we were like, okay, we're gonna raise capital and invested in, at that time it was gonna be seed stage companies. And then for the second fund, I decided, it was a really good experience, so I leaned into being a general partner instead of just an advisor for the second fund. In 2022, I also started writing Broken Money, the book that would later come out in 2023. So deep in the bear market, I'm like, I'm going to write a book on money, and it's going to have a very favorable view on Bitcoin. Because if you look at kind of many Bitcoin books, they'll come out like near peaks. So the book comes out, people read about it, they get excited, and they buy some, and then Bitcoin falls. I was like, it'd be nice to have a book come out in a bear market. So if people buy the book and read the book, it's better than having the book come out at like a market top or a Bitcoin top. So I think while we're in 2022 and while the industry's all breaking, in autumn of that year, I started writing Broken Money. And then lastly, I was at, there was an event called Pacific Bitcoin at the time. It ran for 2 years. That was the first one, I believe, in 2022. I was on the board of a Bitcoin broker, and they had organized this conference. It's outside of Bitcoin Magazine's conference. It's actually one of the largest Bitcoin only conferences in the U.S. At the time, and it was on the West Coast. And that conference was being held while FTX was imploding. So it was in November of 2022. FTX was imploding. And the funny thing is the energy at the conference couldn't have been better because it wasn't a broad crypto conference. It was specifically a Bitcoin conference. And literally despite the price action, like we had fallen all the way to like 16,000, the energy was amazing. And like, I gave multiple talks on stage or on panels. My energy was very high because people knew what they held. They knew what they owned. So again, it was like a kind of a record time of conviction compared to what was happening in the market. And so actually, I would say 2022 was an oddly fun year for me. Mainly just position sizing. If you're 100% into something and your net worth, can go up and down, can fall by 80% at times, it can make you very emotional. But because I already had a large equity portfolio, I own precious metals, I have real estate exposure, not as an investment, but just between the two places that I live. Bitcoin, I went in at size, but it wasn't everything. And so my view was I have very high conviction on the asset. I already know the volatility profile. Like at this point, I've been kind of watching it off and on since at least 2011. So I was aware of the prior crashes and expected it would happen in the future. So my view was, this thing could go up 10x in a cycle, and it could give up 80% of those gains, and then it could go up another 10x. So my view was, as long as I position it appropriately, so that I don't have to sell, I'm not going in with crazy leverage. That I'm aware of the volatility ahead of time and happy to kind of see how it goes. And I do think that for investing in general, objectivity and dispassionate focus is kind of a key thing. Kind of separating the ego from your analysis, avoiding fallacies like sunk cost fallacy and all that. That's more important than just sheer intelligence when it comes to investing or trading. So I just would monitor it as objectively as I could, and say, okay, well, I want to own this for multiple cycles. So unless the thesis changes fundamentally, my view is I'd be long.
So here's where we land. Lyn Alden watched Bitcoin from the sidelines in 2011, again in 2013. It took 3 cycles before she committed, and when she did, she came in with a macro framework most people in this space still don't have. She called the COVID stimulus trade before the money hit. She had 100% conviction in 2022 when the industry was imploding around her. And her core thesis on Bitcoin hasn't changed. Hard money, fast money. The first asset in human history to be both at the same time. What's worth sitting with from this interview is the position sizing point. She didn't survive the 80% drawdowns by being tougher than everyone else. She survived them by never being in a position where she had to sell. That's a structural decision you make before the crash, not during it. If you don't own a copy of Broken Money, get one. It's not a Bitcoin hype book. It's a 500-page monetary history that builds the case from first principles. She wrote it at the bottom of the 2022 bear market because she thought the market needed it. That's the kind of signal you pay attention to. If this video gave you something useful, subscribe and turn on notifications. We cover voices like Lyn Alden, Arthur Hayes, and Rao Pao, the analysts who are actually doing the work, not just chasing price action. Drop your biggest takeaway from this interview in the comments. I read every one.